$1,000 no-doc business loans with your EIN only with less than 9% interest rates and no collateral, plus startup-friendly funding up to 150,000, building your business credit at the same time so you can maximize your potential of getting approved for those SBA 7A/504 loans, the online bank term loans / lines of credit, and more, as well as without a personal guarantee, no personal credit check. Hi, this is Michael with Viral Funding Solutions. Welcome in. I'm an expert business loan broker / business funding expert who's been able to help a lot of people over many years in different industries. Yes, I do talk rather this slowly because I'm more introverted. I listen more than I speak. And I went to school myself. I educated myself. I won't go into my story right now, but let's go right into things on this no doc business loans. In a second, I'm going to be moving over to another share screen where I will walk you through a document you could pick up down below. And if it's not there, it's okay. I will also leave you a questionnaire form to get in touch. What happens is you'll fill this out. I'll analyze and evaluate. I know how to pre-underwrite files very, very well. And then I'll email you back with your best funding option and options thoroughly broken down in an email / PDF format, showing you what's best publicly, information that's not out there, stuff that the lenders don't always want you to know, and much more. So on this no doc business loans, I want you to keep your expectations in the right place. This is why I'm about to say this. It's very rare, non-existent to get no doc business loans, only adding my EIN. Maybe I have to prove with an article of an organization or incorporation, and that's all I need to do. A copy of my driver's license, really nothing. If there's no application, if there is no form of bank statements that I need to submit, any tax returns, I don't want to have to go through all of that energy and time. And then likeliness of getting declined if I had to add more documents, because honestly, the more documents you add, the more of a reason it gives those lenders to then decline you. Gives them for more of a reason, and myself, to look through your interim P&L balance sheets, through your 3 years of personal and business tax returns, and go through other forms of documentation. So they are very rare, non-existent, hard to get. And for the most part, they will require some form of documentation for income proof, for credit. So if you're already trying to get something without adding your social security number, best of luck. These normally require a PG. They require a social security number to check your credit for credit worthiness, your financial track record. Why would somebody give you a loan without any documentation and they're expecting to get their money back, but they're unsure about you? Okay, I'll just still lend you my money and potentially you'll give me it back. If I give you a longer term, the chances of you getting it back to me in full may work, may not work. So there's so much uncertainty when you're just trying to look for a no PG, no documentation, 50 to 100,000. It can really be any kind of number that you're trying to get approved for. But there are those services that are minimal documentation. And I'm going to go through that in another document in just underneath a minute to go over what these services are with lower documentation. And they're very attractive pieces right now in this market, and I'll also be covering what most people are shifting to and what we are shifting to, because a lot of applicants are just not getting approved enough of, or they're not getting anything, or just very minimal, whether it's cash flow, credit, collateral backed, business credit. Which one of those is actually working best? And those are the three that I normally go through with each one of you. You either have the credit, the cash flow, or the collateral. You either have one of these three, two, or all three. And I look at maximizing your potential around one and even multiple. If none of them, business, trade credit. As a startup and as a non-startup, you should be separating your personal from your business. So let me switch over to this other document where I'll be going over some of these services that can be best suited for you. And keep in mind, again, I wanted to keep your expectations in the right place. Stop looking for these no doc business loans. They're very temporary. If they are available, it's very hard. You're only trying to apply with your EIN, but you need to have a higher cash flowing revenue, profitable business, EBITDA. And even then, it's still hard to get approved. Most businesses just don't, even the higher revenue generating ones and more. And if you're just looking for that, they're going to require all your personal assets, your business assets, all these liens they're putting on your properties and all this other stuff that they're putting on your credit profile. And then you still have to go through the personal guarantee because they need to verify your social security number with credit worthiness. So what's the actual answer to a lot of this? If you guys have it, it is fixing it. How do you know how to build your business credit or your personal credit if you're not even tracking it? You should be looking at your personal and business. If you don't have business credit, we can work on that, and that'll be an option on our list. But you should be tracking these things diligently every day, every week, every end of the month, consistently a couple of times throughout the month. And for those of you asking, well, can I get an SBA loan? There are stated income ones, an express loan up to $25,000. But if you don't have 725 plus FICO, Experian plus credit and more other things, and you don't have 2+ years time in business, you're still going to have to go through excuse me, rounds of applications. See, this is what an introvert can do sometimes. It's like I'm not naturally good on video, and you guys probably felt that earlier, but I want you guys to get the most information possible on this. So we're going to try to speed through this document, but stated income up to $25,000, they will require multiple rounds of applications. And they're going to require a personal financial statement for an SBA loan and a few other things. And they might ask for about 3 to 6 months of bank statements if you're an established business. Of course, for 2+ years, you should be at that point. And so they may ask for those things. Just be very cautious. There are credit unions out there, of course. You can say, I'm going to get a no doc, or I'm going to try to get one, and they don't get it to you, or it's very minimal, but you got only 25, 50,000. You didn't even get max approvals. And now you're trying to add another credit union on top, and you don't have a membership with them, or you're not associated with them long enough, and they're not looking at you, or they're not going to approve you for as much. And what you're getting isn't rewarding you enough of. And just think about getting 50,000 in an approval to start a business, one, and to continue to run your business. It may not be enough. A lot of that can be spent towards expenses. A lot of it, you have bills, a lot of the stuff on your personal side. So you really have to look at your debt over annually. So let me go into this document. So this will look a little bit different because it says here, before you click through the application down below, I didn't show you an application. So it just pertains to the video that you were watching. And I made another one where I did document this part of the process. So I told you about in the video, if you watched it, below are more of the qualifications for, I'm going to go through revenue-based financing in a second, and more services like credit and collateral. So stay with me. One thing I do want to mention, though, because I want you guys to hear this, is in the market right now, I know it's hard. Again, leave the whole no doc business loans alone. Leave the whole, well, I don't want a person. You have to be accountable and responsible. What are the fixes to a lot of this? Work on your business credit. If you work on your business credit, you can only go in there with an EIN when you're building your trade credit. If you're trying to get business credit cards, of course, a lot of the times you're going to be held liable, and you need to have a personal guarantee, especially where you are in your part of the process. Everybody's in a different place. And so that's okay. What do I need to do? What does Michael need to do? What does Tracy, welcome in, Tracy, how are you doing, need to do if they want to get better approvals? He knows the answer, and he doesn't need to tell me. Neither one of you. You guys have the answers, but you're not locked in and focused on working in through that. You're working around it. Well, I got 650 credit, I should get no, you shouldn't get that. What we should do is, I'm a doctor diagnosing these things. You guys got to look at it like that. That I'm trying to figure out by asking questions, what's the actual problem or problems? There's something deeper than this. Okay, so their credit is the issue. If they have these late payments, how long ago? Okay, we need to work on credit repair. We need to work on disputing some of these. We need to work on some of these charge-offs. We need to work on some of these things. And it might not be an applicable client in 6 to 12 months, maybe in the next year. But right now we're working on this, so you can be ready for that. Those of you who were preparing last year for this year are in much better position. Years prior, working on your personal and business credit, I'm seeing the biggest difference with those of you who have. And those of you going into it this year, it's a more conservative market. It's hard. What I'm seeing is a lot of disapprovals on the revenue-based financing. I'm seeing a lot of that with even credit-based. Those two are big. Revenue-based even more, because I see a lot of non-sufficient funds, insufficient funds, negative days. I'm seeing overdrafts. I'm seeing a lot of bounced checks. I'm seeing that people don't have enough depositing and they're lowering in certain months, they're decreasing in revenue trends. If it's cash flow based, there's more expenses going out, or there's more applied to expenses, more money being withdrawn than what's being deposited. If we're looking at it on like yearly, I'm seeing a lot less of a cash flow amount for people. I'm seeing profitability lower. I'm seeing EBITDA. I'm seeing a lot of things, and certain businesses are already going up, but a majority of businesses right now are having a hard time. And credit base, if you don't have good credit, you can leverage a credit partner. But if you're trying to get certain business credit cards at that point, you might not be able to get 0%. They might be only restricted to getting personal funding or 401k IRA. And we could do multiple rounds later. If they decided to start an entity, then we can look at it a little bit different. But what I'm seeing the biggest change right now is equity-based financing. Let me get that out of the way. I'll go into this document in a second. Equity-based backed financing is the way to go right now. Collateral, asset-backed, and equity-backed. And equity-backed can be in multiple ways. You can look at it: private equity, equity crowdfunding. One huge one is cash out refinances. I'm doing plenty of these. If you have any commercial real estate or investment real estate that you own, then we can look at injecting equity out of that. And interest rates from there, I'm looking at around 9 to 14% in the market, although they are subject to change as they do on the market conditions, as well as in the industry, as well as a few other things that we have to look at. So they could change from day to day, but I'm seeing relatively low interest rates on that end, somewhat similar, not exactly, but to invoice factoring, which is one on our list for asset backed. So if you have about an annual amount of $1 million right now is what a lot of lenders want, and you have like 500,000 in over 90 days of unpaid invoices that you want to give up to an invoice factoring company with minimal documentation. It's less of a credit requirement, less of the bank statements or merchant account statements and all this. And we're looking at more of your customer on how you are, how they are paying you on what terms and more, and how those aged accounts look, and a bit more of that. So I'm seeing equity-backed financing, a lot of collateral-backed, liquidity, liquid assets, anything that you're willing to give up to get more cash on hand. That is king right now. And credit is one way, not only with assets, but with credit cards. If you can liquidate these 0% interest business credit cards to have cash on hand, to use them for like more fix and flips, real estate investment properties, rentals, commercial real estates, you have everything else. You have business related reasons for growing and expanding your business. That is ultimately what this market is for. Not to say that the revenue base and some of the other credit-based factors won't work, because they work extremely well still for the right applicant, but a lot of people are getting declined right now. I can go on and on about these subjects on equity-based financing and all of these other ones, but let's continue here, and then we'll close up. We're going into 12 minutes. I did want to get that out of the way. Sorry that I didn't jump into this as quick as possible. So there's revenue-based financing with like a merchant cash advance, or there is a hybrid cash advance alternative, which I strongly recommend. And that's the one that I lean in with most clients. And this is where we can look at 3 months of bank statements, a copy of your driver's license, and a voided check. I won't go through all the qualifications in this, but if this document is down below, take a good look at it. And I mean, take a good look. This is in red for a reason, because a lot of you won't take the time to actually read. Well, I don't got the time. That's an excuse. Well, I'm just too busy. That's an excuse. And I'm just busy with my family life, and that's another excuse. And these are a lot of external reasons that you're letting get in the way. If this were important enough to you, you would take the time to go through it. And I'll show you a lot of this more or less in the questionnaire. If you fill that out, I'll have like a PDF/email format. Let me go ahead and share this with you guys right now in the actual comment section if you guys want to follow along. But I would look at what I'm going through. That's where I would begin. And again, I'm not going through all the qualifications, but for revenue base, we can look at just 3 months of bank statements, a copy of your driver's license, and a voided check. Some cases we may make it for 4 months, depending on the state. Other times we will ask for 6 months, and then sometimes up to a year, depending on the seasonality of that business. Like agriculture is one extremely, where we a lot of the times like to look at 12 months, because we see a lot of fluctuations in those businesses, and we see deposits change time and time again. It can be very seasonal. And so there's a lot of things there with qualifications. And again, I'll show you a lot of this more or less and give you a more personalized and customized email response for what these options are, and the best ones, by the way. Like I said, if I didn't, I pre-underwrite these files extremely well. As an expert, I've been doing this for a long time. I have a systematic way of helping you in the most energy and time effective way possible. And I go into this for revenue-based additional concerns for denial. Go through that. Don't just, oh, I got the link here, I'm going to click the link and get started. No, you want to read through this. You can look at where you're going, but at the same time, come back and read this fully. A lot of you are just applying and thinking, well, I got 15,000. I should be getting approved for 100,000. Now with your revenue, now if you have collateral and it's efficient enough and you're generating enough in annual gross sales for those specific lenders, then we'll look at it. And if you don't, that's why the advantage of equity-based financing is extremely big right now in multiple ways. Depending on if you want to give shares away from your company, that's another huge thing when we're talking about venture capitalists and other types of entrepreneurs helping. That's another part. But with like a cash out refinance, if you have real estate investment property, it's not even a factor too much of having good credit. You can have low credit. Yeah, it won't give you the best rates in that, but lower interest rates compared to some of these alternatives with the revenue base where it's already medium to higher rates. That's what you have to look at and go, well, even if it's a medium to higher rate, because it's a risk association that's higher without collateral and these things involved with your credit, with your revenue, your time in business, your industry, that's a huge one right now in the market. You have to look at, does the benefit exceed your repayment? If you can't answer to yourself, what's my return on investment? How am I going to cash flow with taking this money? Will it help me? If so, how much will I improve? Or what will I increase to? Will I decrease? If so, by how much? Over how much time? And so you got to sometimes take a temporary setback to make a comeback with these. You have repairs, but you know you're going to have to do that. I need to get access to this money. There are no other ways. This is faster. What are the alternatives? I'll go into some of that in a second. But the revenue base with the merchant cash out advance, but the hybrid cash out advance, where we're just not looking at merchant card statements, we're looking at the bank statements, and we're encompassing all revenue coming into the business, how you're depositing. And those are other questions that we can go even deeper into and what not to have issues in. So that's one of them. I give you guys more of that information. There are even some underwriting guidelines, some examples of what would be the case. But I would fill out that questionnaire if you have. I'll get back to you here soon. So give me 1 second while I go through this. There's debt restructuring we can work on, reverse debt consolidation. I'm going to update some of this documentation. So if you're looking at trying to pay off your existing balances and you've expired or you've exhausted all other options, I have a lot of people who are doing this right now, where debt restructuring won't work, where we could potentially drop your percentages from 40 to 75%. And that's going to help you make your payments more effectively, whether you're wiping out multiple positions or not. The fact is you're decreasing your amount that you owe. But other ones like a reverse debt consolidation, we give you an ample amount over the amount that you still owe a lot of the times, and we'll have to have you pay the remaining amount. So what you need, you can pay off your existing balances, and then you will still have to owe that merchant or that lender, that provider, with the remaining amount over a year or so. And the payments could be rather high sometimes. It could still be up there in like the 2,000 to 3,000 and above in some cases. So just keep in mind that even though you're paying off positions, is that your only option? And it may be only the one you work with, because the other ones, you don't have enough of the credit, personal and business, the revenue and other things that they don't want to have you go through, and it's not going to approve you for. So there's that reconstruction. There's other options if you don't qualify for some of the higher based revenue services. The online bank term loan, this does require more documentation. So this isn't on track with the no doc, or in this case, low doc. This will require more documentation, tax returns, P&Ls, things like that. And not as intensive as an SBA loan, but it's up there. So just keep that in mind if you're avoiding it. Now, let me move over here. Give me 1 second. There's some details on SBA loan options that require more documentation and more time to get approved for. The SBA Express loan up to $25,000 and how you would have to go through that, but that's not completely no doc. It could be low doc, but it should require a few rounds of applications, a personal financial statement, and potentially a few more things. And then here, just detail more of those options. Give me 1 second. Oh, one of the big ones. This is not a low doc by any means, but it's one of the most popular right now. And this is the Bolt SBA loan between 25 to 150,000 that we can get people within 7 to 10 days, more or less. And this is only used for working capital, not restructuring debts or not consolidating refinance. This is only used for working capital. There are higher tiers of SBA loans up to 5 million, up to even 350,000 in some cases, that do the consolidation refinance. So if you do need help with that and you are an applicable or a qualified applicant, then we can work on that. But this is a huge one without any collateral, no down payments. You can be reporting the loss profitability. Cash flow could be okay, not the best. And we can still work with that because we're basing it off of annual gross revenue off of 150,000. FICO SPSS business liquid credit, though, needs to be high enough, 175 FICO SPSS, and then 700 plus personal credit score in 2 years' time in business. And so here, there are more options to consider. Let me move up to this. So this would be a business line of credit. And this would be another low doc, not exactly no doc, but there are these financial tech companies, or we will call them fintech companies, that are willing to work with business owners who have better personal credit. Let's be honest, in this market, you might see advertised on a lot of different lenders or organizations, well, you could only get in with the 550 or 600 plus credit with 10,000 per month in a year's worth or 6+ months time in business. And it may be the case in some places, but it's very hard in this conservative market where the lenders who are lending lines of credit are tightening up and they want to see, oh, excuse me, here. I didn't have the HP lighting in hand, so I do apologize for that. I don't think it made much of a difference. Oh, there it is. Okay, so I have an HP lighting on my laptop that I want to have, and see it didn't make a difference. I'd have to have the light on. It's got just a little bit darker too here in Washington. It's been weird. Warm weather, hot weather, and then warm and then cold, windy again. Okay, but what you have to keep in mind is that business lines of credit are hard to get approved for. I've had people recently go, hey, can I get a business line of credit? Not a true business line of credit unless you put up collateral. And then we can potentially do somewhere between 250,000 and above, up to 100 million or so. But most people don't have the collateral. They don't have the unpaid invoices or the inventory. I'm going to go into one of those options here in a second. Do you have commercial real estate and or developable land of this amount? Do you meet the qualifications for? Well, I don't meet the qualifications, but I have commercial real estate. Well, can we try to do a cash out refinance? Can we do a sale leaseback? If that's the case, where the lender will hold on to the title of the property until you pay the full amount back. And so there are things to a lot of this. In a business line of credit, they're going to require you to have more than even 6 months, 2 years, plus minimum 2 years. A lot of them want to see 3, 5+ years, depending on the type of business and the industry. Revenue, they want to see 40 to 50,000 per month. They really want to have you get up there and getting closer to $1 million in annual gross sales. Some of them will look at it a lot less if you have a lot more time in business, and still it's going to be hard to get approved for. So they're looking at it even more now with revenue. They're looking at the credit 700 plus FICO. They're not 700, they're looking at like 725 and above, and everything else. If everything looks good into the accounts, we're looking at the bank statements, everything looks clean. The daily bank balances, the monthly, the weekly, bi-weekly, everything looks like it's checking out, clean file, nothing with missed payments or all of this other stuff. Even with lower revolving accounts, we could still take a look at this. It's not exactly like credit-based, like when we're doing credit cards or we're doing like a personal loan. That may be a little bit different where they're going to actually require more revolving accounts. This one, it's per case basis. And if you still have low amounts, it is not an age history, they may still look at that and go, it's hard to lend them a line of credit if they showed no sufficient history of making payments over a specific amount of time. So even with lower revolving accounts, we could still take a look at that, but they're emphasizing now stronger accounts. Just keep that in mind, and things can change. So those are the requirements. There's quite a few more things. I don't want to go through all the details here. I'll show you some examples, but the questionnaire again would be the place to begin. Now there's equipment financing that still requires a little bit more documentation, an invoice or a quote for that specific equipment or multiple, or whatever it is you're trying to do. But there's equipment financing there, as you see. And in some cases, we'll just need 3 months of bank statements, a copy of your driver's license. Well, sometimes 6 months, 3 months, invoice, purchase order for equipment for the quote, a voided check though, and a copy of your driver's license. So it's still minimal to a degree. Other options, and I'll show you that may not be best. Asset back. Now here's another one where it's low documentation driven, and they would require, a lot of these lenders want to see 50,000 in monthly revenue consistently. They're going to want to see even higher, and about an annual amount of $1 million they're going to be shooting for. They want to make sure that in fees and everything else that their ROI is enough to invest in, and also in the market, the conditions, the appraisals, and the appreciation and depreciation of equipment and things at auction costs, the value. See, what you think is a value is the difference when the lender looks at it and when they're doing like appraisals for property, environmental things, and they're seeing what the actual value of the property is, what's the market condition like right now, how much do you actually owe on that property, do you own it all the way through, you don't have any extra payments, all this stuff we got to look at and make sure we give you the right percentage. And this is stuff that I can help you in time. But assets or collateral, typically you can access 50 to 90% of your collateral, whether you utilize receivables, which you may or may not be. This is just something I put in specific to someone else. Not too long ago, I was showing an example of, but it can vary. Purchase orders or another option. It could be secured by a line of credit, backed by accounts receivable collateral is what the lender is looking for. It's a streamlined, transparent process within 2 days or so of decisions. You can accelerate the closing. So it doesn't have to be like you're waiting, okay, when am I going to get this funding? Can I get this done already and all this? And with me, you don't have to worry about like any kind of pressure. It's a safe zone with me, pressure free. But hold yourself accountable and responsible. I know a lot of people who take shortcuts, and I'm like, if you take shortcuts with this, I can only imagine how many shortcuts or what you're doing in your business. You may not take shortcuts there and you're only trying to shortcut this, or you maybe just don't have the finances together. These are things that are understandable when you take on too much in your business and you're not separating yourself and focusing on other areas and those skill sets to understand your finances, understand cash flow, understand lifetime value of a customer's long-term value of a customer, understand the cost per lead, understand your conversion rate on your website, on your landing page, and how that number is in accordance to your cost per lead. How much are people buying per month, per week, per day? All of these things you guys got to understand. Churn rates, increasing the amount of sales, increasing the amount of people. Is it just the churn? Your hypothetical max projections. There's quite a few more things to go through. Accelerated closing, as I said, up to 95% advance rate. A lot of the times you'll see no industry restrictions, validity and personal guarantees are usually given. That's just the case with a lot of this. I know this is a subject on no 50,000 or however much and no doc business loans, but I really wanted one without no docs, without a social security number. I just wanted an EIN only. That's so difficult. Come to the realization that what you must do is fix the problems and stop masking them. And so what if it takes you over a year? Do you have a credit partner? If a credit partner is willing to go, hey, I may not have a business as a credit partner that I can assist you. I don't even have 10% ownership in the business to try to get these 0% interest business credit cards. Okay, well, you don't have an entity. We can work on personal funding in the meantime. Get a personal slash term slash installment loan, maybe even a personal line of credit, personal credit cards on top of that. Okay, now then, once you have everything in your business, things are going the right way, then you move those personal accounts or those revolving accounts, personal credit cards and what you have, and you move it over to an installment, a personal loan perhaps. Or then you start moving that over then to the swipe file business credit cards if possible. So you can transfer if so, not always the case. But you got to look at, say, okay, now I can get approved for 100,000. I have 20,000 left in my personal loan. These are my payments per month. This is what it looks like per day. If I just wipe that out, then that would remain, that would give me more cash flow. That would allow me to then add this money into bringing in and hiring more people. Then I can add more equipment. I can add new inventory that will increase my cash flow because based on the old inventory, if we added a modification to this new inventory, I see sales increasing by, and I test that product out. And if I don't see it working by a specific time, I clear the shelf. I have too much on the shelf. I'm losing money. I've added inventory that I'm looking to move quickly, get it out. I'm trying to liquidate property completely, move it away. I'm looking to take equity out of property so I can use it for whatever I need to do. I want to liquidate these 0%. See how all of this is coming together? You're liquidating cards. You don't have to give away your complete assets or asset. Oh, but then I can do a cash out refi. I got the property. I'm going to take out a minimum of $250,000 on this property. That's about $1 million in value. Great. I'm working with a lot of people on this, by the way. And so I go, okay, you already have $250,000. You have the business credit cards. Yes, they do. How much do they have on that already? Existing amount. They just asked for an increase from Wells Fargo or whatever they're doing. Now they have in total 50 to 75,000. Okay, so 250, 300,000. So okay, 375,000. You needed closer to 400,000, or you have an extra remaining amount. If there's 0%, great. If they're not, what are you trying to do? You're trying to consolidate. You're trying to refinance. I know all of this, guys. I know the psychology, a lot of this, because I run multiple businesses, if I didn't say this, in the digital marketing agency, lead generation space, as well as affiliate marketing in the health space. Other verticals there, other ventures. My primary focus now as a business loan broker, business funding expert. This is what I do every single day, and I see it all the time. I help out a lot of people. On a personal level, I care. I do want to take the time to get to know who that human is. What's their character like? That matters a lot. because these are my babies too. These are my businesses that I'm trying to protect, but I'm also trying to get to know the person at the same time to a degree. And I'm an introvert, and that's hard for me to open up to people. It really is hard. And it's like a lot of people time and time again prove to me that they can't be trusted, that they're not loyal. A lot of people prove to themselves that they sabotage. And that's just a character issue. That's a fundamental that needs to be worked out. And if that's something that doesn't get worked on, then we leave that out the door, because I don't want that influencing. I don't want that creating and causing friction and all this resistance. You have to understand that from our point of view, from my point of view. I'm protecting myself and I'm protecting my team from having to go through any of this. So keep that in mind. We want to be as energy and time efficient. And if you're serious as much as I am, then you can answer the rest. Qualifications: 250,000 in agent account receivables or 1 million in inventory. We'd like to see like this number gets adjusted. So right now, a lot of the times we like to see 500,000 in total over the last 3 months in agent account receivables to do an invoice factoring is what we're looking at. No minimum FICO, but there will be, it's not really a FICO check on your part at that point, but minimal would be great to have. And if there's something we need to look for, we do. Okay. No minimum time in business, but there is an exception to that depending on the annual gross sales. And so more so we want to see more time in business in this facility size, the amount, the terms I'm seeing 12 to 24 months. Rates, they start at prime plus, so about 8.25% plus, and that number can adjust with the Wall Street Journal. It's not an ARM traditionally. It's not a home mortgage on what's affected by it and all that. Documents needed, like a 60-second online application, recent 6 months of bank statements, 6 months of recent credit card statements, if you have them. If not, that's okay if you're doing credit card processing, a few other things. Most recent business tax return, but that is a lot of the times what we'll ask for. If there's anything more, I will ask for it, some subject to change. And so here, accounts receivable, AR line of credit, invoice factoring. As I said here, the 500,000 over the 30, 60, 90-day total, $1 million in annual sales. A lot of the times they don't require a credit score. A lot of the times, though, like I said earlier, no time, but realistically 6+ months, but a year plus is preferred. Some other lenders will look at 2+ years in specific in that industry, and the location wise as well. It's also very important. Seller one or several invoices get funded immediately, manage cash flow gaps, a revolving line of credit. That's another way. When people ask me, can I get a business line of credit with what you have? No, I've looked at your credit. I've looked at your revenue and all this. Even if I didn't look at it to an extent yet, I know for a fact you won't qualify. I know for a fact. We'll just save ourselves the energy and time. And here's what you need to work on in the next year or in the next 6 months. This is where you can be. Well, if you had that, then we would work towards this. Facility size, it can be realistically up to no cap on that amount. Line of credit amount fluctuates as AR fluctuates up and down. Rates start at 8.25% or whenever it's adjusted when you're watching this video, plus 2%. It can be 2 to 3 or so percent. So you're getting close enough in lower than 10, above 10% in those cases in this market. And then in the high single digit / teen rates, 4 to 7 days application to funding. And then more details there, how we can potentially lend up to 95% on your aging receivables, flexible terms, 6 months to 10 years and above. 12 to 24 months I'm seeing, but even more than that with account receivables, the funding amounts, their documents needed, as you see there, aging AR report 2021, or what is related to the year of the year-to-date balance sheet and income statement. So this number is changing over 2023, or you can see 2022, and year-to-date balance sheet and income statement. Most recent business tax return, 6 months of recent bank statements, completed application, digital app, usually most of the time that we see there. Inventory financing, as you see there, similarly, but access up to 85% a lot of the times on inventory liquidation value. Again, the key word there, liquidation, is huge right now in this market. 7 to 14 days application to funding. Qualifications, 1 million in current inventory is what they normally want to see. If it's less, we can take a look. 1 million in annual sales, still worth a look. If you're somewhere just underneath, maybe we can still take a look. 1 year time in business, no minimum FICO. Asset backed with commercial real estate and or developable land. Did you know you can put up commercial real estate and get maximum funding up to 80% of the property value? Here's the funding terms and rates. I won't go through it all, but you see an example there that I listed. I can go through many of them depending on your scenario as well. We won't take up time on that in this video though. Indicative term, 7.5 to 8.5%. So it's already underneath that 9%. That's really, really good. When you're giving up assets to get funding, you're getting the lowest interest rates that you can in this market. Not 3%, not 2% where we were many years ago, but that's still a very reasonable amount. And that can change. That can go up at any minute. Literally, things can change in the market and depending on what we're taking and the value and all of this other stuff. Up to 5-year balloon, and then after it's over, you pay the remaining balance, or you can look at refinancing it as well. I know that's not an attractive piece, but hey, Michael, I don't have the money after my 5 years is up. Well, that's a problem. You knew what you were taking. If you didn't take this money to make more money with it, okay, I'm going to at least 3 more buildings that I'm going to get people in within the next month, that I'm going to start generating about 50,000 per location or whatever you're doing. So my revenue is going to go from 1.8 million to around, I'm going to say 3.8 million over the next year and a half. So I'll be fine giving up that property that I have the value in and all this. That's okay. But for the business owner who goes, oh, I don't know what I'm going to do. I'm going to go search for a friend, a credit partner. I'm going to go try to do this. Like, you've got to think about what you're trying to do. Minimum requirements of up to 30 years amortized monthly payments are available. Minimum requirements. This one does require 75,000 in annual growth or in monthly sales. It has to make sense for you to sufficiently service the debt, as well as much more. You have enough income coming in your business, and quite a few more things. Owner credit, though, could be more lenient there with 600 plus FICO credit, and just a few more things that I won't cover all in this video. But here, cash out refinance. This is a huge one. This is amazing. This is like my number one. This is like right now the bread and butter. This is like the king to credit right now. This is everything. And I'm not going to go through all the details here. I'm going to actually update this part because I added extra details from another document. But you don't have to go through all that right now. I have it in time. But if you have any commercial real estate or investment real estate that you own, or if you want to use it as collateral altogether, we can do that with the sale leaseback. So it's a very attractive piece. Let me open up this actual other, so I can go through some of I have it all by memory, but I just want to make sure I don't miss anything. I'm opening up my Word document, and this is what I helped somebody out with recently. I put it in a PDF format for them. So you do know that we can inject equity out of, I've more or less said that the interest rates are somewhere around 9 to 13% or so, and that these rates, they are subject to change on a daily basis due to the market conditions as where we are right now. Things are hard for a lot of people. And it depends on the property type, your credit score, or someone else's if they are helping you get funding with their property or property. So you can align with someone who has this. You can align with a person who, excuse me if it's kind of dark, guys. Didn't turn on the light too. But you can align with somebody, like a lot of people right now, over 40% of people use a credit partner. That number is staggeringly higher now. I don't have the exact amount, but I can pretty much assure you that it's way over 70%, way over 80% in this market. That number has been just changing. And again, the reason for it is because revenue is getting harder to get. Your depositing frequency isn't well enough, but you have the credit, but you still didn't qualify because of revolving credit accounts, because of charge-offs, because of too much activity, closed accounts with the remaining balance. I can go on and on, late payments. So then you have to leverage a credit partner, but you got to look a little bit deeper and say, does that credit partner also, is it a friend or a family member? Is it a business, another partner in my business or in another business? You got to look at that too and go, do they have commercial real estate or any investment real estate that they own? Hi, Jeremy. Hi, Sally. Yes, I'm willing to help you. My property value here, we're going to do an appraisal and stuff too, but how much equity is in the property? How much are we willing to loan you on loan to value and all this other stuff? And then you go, oh, that's another way for me to get 250,000. Like I was going to get approved over here for nothing, or just about 20,000, or a credit union where I have somebody over here who's willing to help me. Great. And so now I have that option, and there are other ones out there, but you got to think outside the box and leverage a credit partner. That's what a lot of people end up doing. My revenue is already hard enough where I'm not depositing frequently every single day. I have insufficient funds, and I have negative days, and I have bounce check and all of this stuff. And then over here, you're like, I got high debt to income, and I'm trying to lower my utilization on all accounts or on revolving accounts. I'm trying to have a better spread. And it's like, I'm trying to help you here, but you haven't helped yourself there. You haven't even helped yourself enough here. It's hard to find out sometimes what you can and what you should and shouldn't be doing because you don't get all this information. You don't have the collateral. Like, do you have stocks? Do you have property? Do you have a 401k, IRA accounts? Even more than that, it's like crowdfunding. Don't want to do that. Well, I got this credit now. Like, you guys are putting me in a position where I don't want to be that guy having to tell you guys this. And I'm an introvert already. So it's like, I don't want to be doing that. I hate having to disappoint people. But the truth is, I have to give you guys that. I have to give you guys the tough love in whatever communication channel that is. So cash out refinance, that is a great option that many people are turning to. Here, let me move this over. And I'm going to close up here 40 minutes in. We're going to close up here soon. Okay. I don't want to go through all the details of the cash out refinance. I have a few of them, but a lot of the times the lenders want a minimal property value of $150,000, 30-year amortization program. There's a prepay. This could be 5-year prepayment penalty with 5%, 4%, 3%, 2%, and 1%. And I won't go through all the details. It depends on per case basis on what we're looking at. Appraisal fees, underwriting fees, environmental fees. That can be somewhere underneath 10,000, and that's okay. That's off the amount that you're getting normally a lot of the time. So gas zone properties, locations like that will be hard to fund. But any kind of stuff that is worth that being looked at, and any kind of mortgage company and things like these, then we will consider it. And I won't go through all the steps. I have a lot more details to that. Let me see if I can go back into this screen. Give me 1 second. There's the credit-based financing, although this could be minimal documentation depending on what type of funding service when we're getting creative. With personal loans, is it then business funding with 0% interest business credit cards, or what are we looking at? And so here are more details that I outline in this document, and potentials for disqualification. I have listed that in there as well. And there are multiple creative credit-based financing options, but I'll show you which one is best, normally the first one to begin with. And when you fill out that questionnaire form, I'll be able to show you even more specifically on where to get started and not to look at the others. And you can look at them and go, now I know that this one will require 5 trade lines, but the other one requires at least 2 or is factored into that credit. If I have that on all 3 consumer credit bureaus, great. And that one's even stronger. And they have a stronger 0% interest business credit cards stacking program. Wow. Nobody's showing me this. I'm hearing a lot of it. Nobody's actually going into it in depth. So there's creative credit-based financing depending on the service, but there's true no doc, 0% interest business credit cards that we can look at. That is very huge. And what a lot of people are doing right now with this credit line hybrid program. And I'll navigate you in the best way to get started. But if you have 700 plus credit on all 3 consumer credit bureaus, and if it's just the difference of having high balances, then we could still consider you. This is a higher risk for a lot of people who take on credit cards too. And after that introductory period is over, that APR extending above 20%, 25%, 17%, okay, but how are you using these funds? That's how you have to go about it. Stop looking at it as, oh, that's 38% interest, APR, 98% on this other one. Oh, I got 25% APR, but these cash advances are high and I'm trying to get an APR of 15%. Like, if you have that wiggle room, sure. And if your numbers tell you, and it's like, okay, this is what you've done recently, but this was something you did 2 to 3 years ago that doesn't apply now. And so based on the extent of that history as well, that won't be a final decision in all cases. We have to see now what you are doing, your projections, cash flow, profitability, all of these other things you may already have an understanding of, as I do with my businesses. I look at my numbers all the time. I'm a numbers guy. I'm a numbers and systems guy. And so I constantly look at my accounts. I constantly look at my business checking accounts, my checking, my savings, my cash flow accounts, my profitability accounts, a lot of this stuff, whether it's on an Excel spreadsheet or it's in different ways. I know my numbers. If I came to you and I needed $30,000, I know my chances of getting approved for $30,000, even though I can get more than that, are very high. Because one, I do this. And then secondly, I've funded my businesses and I've used money, personal and business credit in other ways as well, loans. And I know that if I'm taking $30,000 for a couple of marketing campaigns, my history shows me that I put $1 in, got $2 out. I'm moving from $1 in, getting $3 out. I'm targeting and I'm segmenting into a new demographic and psychographic that if I just use it for this, I've already experimented with, I'm going to get a better return on my investment. Paying back $45,000 on $30,000 is no problem to me. Over how long? Okay, I can actually pay that off in the next 2 to 3 months. I have 2 more contracts that are coming up at the end of that month. So what can I do? I'm going to come back to you, Michael. I'm going to pay this off early payment discounts. That's the kind of person you're getting in me. But when I work with people, it's like they don't really understand that, and I'm helpful. It's okay if you don't. I'll help you understand these things. And it's a business at the end of the day. You have to know your numbers. If you don't know and you're just going at things blindly, there's a reason why you come to me and go, I wanted this, I wanted that, and I get it. And I hear it all the time. And I don't say that to sound mean, aggressive, or negative. This is just tough love, guys. And I'm a Libra. I'm a very quiet person. I'm very introverted. Now you're here seeing me on video. Hope this is helpful for you. But let me go back into this document and we'll close up 45 minutes in. Underneath an hour, I'm going to close up here. So 700 plus credit is what they want to see for multiple business credit cards. We can add on top of one another. Like let's say we do a Chase, we can do a Bank of America, PNC, Truist, we can do national, regional, and a few other ones as well if we need to. But you see that they're under 40% utilization. That's a common need. Other ones would look at 35%, 30%. You joined the 800 club, less than 3%, less than 5%, less than 10%, and less than even 2%. On all accounts, on all cards, we're very diligent about how we look at our credit because we know this is going to help us get approved for better funding, better terms at better rates, everything else. We're going to look like a better client to the lender. And somebody who you go and get lending with that has like very low 500 credit or wherever, it's like they're already a high risk. Like we got an eye out. We have to keep an eye on them. We're going to give them funding, but they already have too much. And so if you don't know what you're doing, like you got to understand where are you coming from. I'm not judging people. Like if you don't understand anything, even if you do understand something, I'm not going to judge you, but you got to know this stuff. You got to really dial in. And then all what we're looking for there with certain things like a credit card with 3 years old, with 5,000 plus limits. Some of them may require less than 5,000, like 2,500 plus, but normally it's 5,000. Sometimes it's 2 years, 1 year, but 3 years is usually it. 5,000 must be a primary card though. No authorized user accounts for qualification in the step-by-step process there. SBA microloans, grants, angel investors, SBA Community Advantage Program that do require like those FICO SBSS for the most part. Equity crowdfunding option. Those are others. Like I said, with equity, I'm doing a lot of this with people too. I'm doing a lot of equity crowdfunding on top of startup funding, revenue, all of them. But I'm seeing a lot of equity crowdfunding. I'm seeing a lot of investors, private investors, and venture capitalists and stuff like that. So venture capitalists, you see that, other crowdfunding, VC and angel investor options, marginal accounts, margin accounts, financial guarantee bonds, and then just increasing your FICO credit score is one thing to work on. Credit repair. And then the last one I'm going to go into where it's low doc is business credit. This is the last one I'm going to end here in the next 2 to 3 minutes. Business trade credit, getting fleet credit, retail store credit, vendor credit, getting these net 30 accounts, trade lines, reporting on your business credit profile, having more than 5, having more than 1, 2, having more than 10 accounts, building up a FICO SBSS business liquid credit score, and making sure you're established well enough so then later down the road, those lenders, they will look at that. They'll look at everything and they'll say, okay, can your business stand alone? No, it can't. There's no creditworthiness on your business side. Adding your personal and business, no creditworthiness. Maybe on the personal, but there's still things that they're looking at and go, there's not enough here that is going to help. And even if you have the collateral, like I have a lot of people say, I need the collateral. If I have the real estate, you're still going to get the, like, you can go to an asset-backed lender, but an SBA loan lender that requires collateral, up to 85% collateral coverage in a lot of cases. And collateral is not the primary look. Cash flow, profitability, liquidation, all these other things are a little bit different. When it comes to the collateral and what they take, that can be the last piece. Not all lenders, all SBA lenders are required to or will take collateral. Many of them will if they need to and put these liens on because they go, I can't get this done unless I take this. You have enough cash on hand, but I need to have a form of this, of real estate. I need to look at that. And so just that alone, without the credit, you have the revenue, you have the time of business, but it's like, it's not enough to get approved for. Okay, so there's more to this document. Let me just quickly have you glance at it, Excuse me. I'm going to update a few things here, but you can see that there's new construction. You need any kind of real estate investing projects. There's information for that on how to get started. Conclusion, the 3 C's of capital. This is a great one. This is what you want to watch. Like you click there, go watch. It opened up in an external tab for me, but watch that. And I detail credit, cash flow, collateral. And if you have none of them, business credit, or we work on business credit at the same time as a startup and as a non-startup. I know, guys, this is not the most like, I don't qualify for anything. Or I do qualify for something, but that's not what I wanted to do. The market is bad. I can't tell you guys how many times I hear that. The market is bad. And yeah, it is, but you're letting the market dictate whether you're getting funding or not. You think I'm going to let that happen? No. If it's important enough for me to take this money and I can make more money with it, and I really needed this for other reasons as well, depending on the service, guess what I'm doing? I'm getting it. I don't care. Charge me 38% interest on that 80,000 because I don't have the credit. That's not my case, but just throwing it out there as an example. But I can take this 80,000 and I'm going to make 200,000 with. Like I'm going to make 160,000 with. I'm going to make 150,000 with. Even if it's your repayment might be slightly higher than what the benefit of it is, you have to look at that and think, maybe I can start off with less. Maybe if I can get 25,000, lowers my repayment, and then I'm going to get back more. I'm going to pay this off in about a month, or it's going to be even less than a month. And then I get those early payment discounts already in. Great. And then I'm getting more funding on top of that. A lot of people will come to me. I had a great phone call with a gentleman yesterday, and he answered without me saying anything. And he said, I told him about the success fee on those credit cards. It's 9.9%. It's really low. And you can go into a bank, try to get an approval. Maybe they don't approve you, or they do for a couple amount, but you're over here getting max funding with the experts, myself and my team. And so what's the trade-off? What's your opportunity costs? What's your measurement at this point? There's so much more I can even get into in economic terms. I studied that. I studied chemical engineering first. I took a lot of economic classes. I then got into chemistry is my favorite class, but then I moved into business administration. Sociology, when I was a Division I soccer player, then I moved into chemical engineering, as that's how my brain is wired, math and systems, and chemistry being my favorite class, took the calculus as the statistics and the harder classes. And then I moved into business administration, not because it was like, not that it was like, but I wanted to get into a business eventually. So I started getting into the finance rules and started getting into those classes, understanding a lot of that. And then, which is probably where I should have started in the begin with, but I went to school to actually challenge myself. Not saying that those classes are not challenging, but I actually went into something where could I become an engineer? And there's no doubt that I could have, but I then ventured out in another way, wanting to start a business. And I knew this was the best route, and I'm not looking back and regretting anything because I went through a lot. And then I actually worked in different fields. I worked in construction, I worked in manufacturing, and I actually worked in the field. I actually worked on the machine in an aerospace company with my dad. And in the previous role where I was in a construction company working in manhole sewer rehabilitation, getting in the actual sewer holes. And this was in my younger 20s. And I went to school, I educated myself. So what am I doing here? People were probably asking that and wondering. But I went through a different phase and a time where I wanted to gain more experience. And through all of that, I gained a lot of wisdom. A lot of people would tell you that. And working in also warehousing environments in other locations as well, eventually getting into a financial logistics position where I couldn't move up a higher role. The person in front of me did not want to retire, and they were supposed to, an hardware engineer. And I couldn't get up in a higher role, couldn't get paid more. I was getting underpaid. It was bad. But I was working for one of the biggest contracting companies servicing HP and Peace Health in those companies. So it tells you a lot. And it's like, okay. And then working in a cubicle hard, working on budgeting, spreadsheets, and doing all this stuff, ordering, shipping and receiving stuff as well, logistics part of it. And a lot of these components, also lifting media up to take it up, and some of the physical parts of it that weren't as strenuous. There were parts and times where it got heavier and it picked up, but it wasn't as bad. And I'm not a physically adept person. You could tell if you see my genetics. I mean, grew up with that. But guess what I have that most people don't? And you may have this as well. You got to work on it. The mental fortitude. That's what a lot of you lack. And you got to have that right here protected. And if you have it, great. If you don't, I'm not looking down on you. I'm saying we got to work on this. As a business owner, personal development is huge too, because that leaks into your health, that leaks into your relationships and much more. And that also reverses and goes back into your business. So I took a lot of time to work on myself, although I wasn't bad, but I worked on myself very, very well. I grew up well. I did things right, went through other ways first, and then got to where I got to, even at a point, even before the financial logistics position and so forth. And they're out. I was even working for a courier company in a whole like administrative role. And I was doing a lot of the stuff there. And if they had to take me out and for to drop something off, I would be that person who had to do that. Not that I like to, but that was at a different time. And so a lot of you really got to understand hardship. You maybe understand hardship in your business already. Great. Maybe you don't understand enough hardship in your own personal life. You got to get a few rounds into that. But at the same time, I'm not saying go out there and act hard or try to rack up more, I guess, credibility. That's not what I'm saying. It's just put yourself in situations that are more challenging, things that you wouldn't have thought of. And for one, when it comes to being around people, I'm very good at communicating. I just don't communicate as much. I'm an introvert, one. I'm very cerebral. Like, I'm a very good observer. I can read people very easily. Like, I know, like, I'm willing to speak to them, but as in being like a friend long term, and like I know how they act, I know how they're gonna be. Like, I gotta be careful about these things. And so, kind of like when I'm trying to help people here, I go, that person is ignorant. That person there is stubborn. That person is cocky. And I may not be able to sense that right away, but in a lot of ways I can. And so it even shows up in email communication and quick text messages. I have people showing up now, or I asked for something a week ago. I'm sure they saw my message, but they chose to ignore it at the time. Okay, they changed their way. Should I give them a response back immediately, or will I? See, what goes around comes around. Right? For those of you who listen also to your Justin Timberlake, what goes around comes around in Timberland. You guys will know this. But really grasp that character is everything to me. It matters immensely. Now, you don't have to be like me. Gerardo has heard me say this. You don't have to be like me at all. I'm not saying that. I'm not up here looking down like the king and whatever. I'm not. What I'm saying is we leave that out the door. We focus on our processes, and we don't let any hard-headedness, we don't let any stubbornness, no egos get in the way. I get it if there's something that needs to be worked on, but that's what's sabotaging you. You're holding back. A lot of people who comment on some of my reels go, that's a scam, or where could I get an EIN only loan? Even after I've explained it to them, and I go, did they even watch the video, did they? It's like, are they paying attention? Are they only hearing what they want to hear? Or are they really listening to the guy who has the big ears, who has the big eyes and the big nose? I was given those for a reason, right? I listen. People on a call with me, or just in other ways of communication, if that even happens on a call, it has to make sense to. I pause. You'll hear me go silent. You won't even hear a word sometimes. It'll be like a gap, because I'm listening. I hate that I have to say, or I dislike is the word, hate strong, that I have to say, I'm just sitting here listening. I absorb more of everything than I speak, because I'm in it. I don't want to have to go into that. You may already know it already, but it goes without being said. I won't talk over you. I won't pressure you at all. That's lame as heck. I don't even like to use the word sales or sell in whatever context, whether it's good or bad. It's just I grew up different. I didn't grow up in sales. I didn't grow up in marketing. I learned marketing. I've gone better at this whole sales thing. But I don't pressure people. I don't sit here and I go in like the fanciest attire, walking into an office like with all the words. I don't have to be that guy. I could be the guy who shows action. I know very well how to communicate and verbalize the things ethically you need to know and hear that are of benefit to you, not just to say them. But you also have to hear what I'm not hearing or saying, excuse me. Read between the lines, guys. And so just be cautious. What everybody presents themselves to be, that ideal suited, nice slick haired, and he's doing this or she's doing that and communicating with you, and just be cautious, because I see it a lot of the time. And just think about, can a quiet person in the room also be the most deadliest, the person that I actually need to be getting help from? That's usually, in this industry, really not always the case, because you haven't come across somebody like that until you come across me and you go, I want to surround myself around his table. He didn't say too much. He showed me in an actual document. He showed me a blueprint, and we went over it together. And he went, oh, Okay, so I need to align this. And how do I align this? By adding 2 to 3 more trade lines of revolving accounts. Here's where I want you to start with step 1. I want you to go through this and apply for. Step 2, in about 30 to 60 days, then you will do this. And I really got to take the time to understand you and your business. Like, everybody shows me what they need funds for. I really know what you need funds for. I really know what this is going to turn out to be. I really know there's a high cost here, low cost there. This is a chance worth taking for them and for myself. So I look at everything. All right, everybody. Appreciate you. Thank you, Gerardo. Thank you, Tracy, and everybody else who was able to join. If you didn't comment, it's okay. I'm that person too who goes into rooms and I just listen. I maybe we'll chat in the chats, but like they say, great leaders too don't need to verbalize everything. They can just show it with their actions. They need to verbalize to a degree, but I don't always need to say too much. Just listen. I think my words through very carefully. So that'll be everything. Down below in the description will be that questionnaire to get started. If you have filled it out, I will get back to you soon. And for anything else, please send me an email. I'm catching up on emails with a lot of people right now. Last night, I went through the beginning of May, and I still have the last months to go through a few of them. And so I started from the beginning or the end of April, actually, there are a few in the beginning of May. And so I'm still catching up on those, and I'm going to move forward with them. So keep at it. Keep looking out for emails. I'm still here. Gerardo knows this. He knows I haven't been able to get back to him as well. And that's just the case sometimes. And there's things that have to evolve and change. And it's like, now I got to help that person right away with this. This lender asked for me to do this. I got to go look for bank statements now and documentation. I got to collect the articles of incorporation, organization, the EIN letter for this service. I got to collect the personal tax returns, and not just collecting them and sending them, but collecting them and reviewing them and looking at all this stuff. Yes, guys, I do review. I look at a lot of this stuff. Normally I do myself and or with my team and so forth. So that is everything for me. Appreciate you all. All information down below in the description. Talk to you all soon. Take care.